All right, hey traders. I'm going to talk a little bit about liquidity in terms of how these processes work, okay? Because obviously liquidity drives the market, and you may see a breakout and think, oh, it's a breakout, it's going to be a liquidity grab, but it's actually not a liquidity grab. And there is one there, it's just a little bit different in terms of the way that you look at it. Okay, so once we've got this closure below, and then we've got this 30-minute candle, you can notice that the 30-minute candle also closed below the zone, right? And this wick up here is part of the candle stick anatomy. Okay, so we remember that the body of the candle is this, okay, and the price action comes up, moves down, moves up, moves down, moves up, moves down, moves up, moves down. Okay, now on the lower time frame, so you may see something more like this. You see a 15-minute candle close or just come up above, and it looks like a reversal pattern, or maybe on a 5-minute or 1 minute even. The 1 minute time frame is deadly if you don't have enough experience in this market. Okay, and what it look like on the lower time frame is it look like it's rejecting this lower level and coming back up, and then all of a sudden it will start to slam down. Okay, so liquidity on a breakout is this candle opening, okay, and what it does is it moves up and then it comes back down, okay, on the 30-minute time frame. Wait for the closure of the candle. How many times have you read or have you heard that in a video, or someone has told you wait for the closure? Okay, so wait for the closure of the 30-minute candle, then you move on to the next one, and you get the same sort of principle, right? Now again, we need to follow these wicks, okay, because we're creating lower highs all the way down. So we want to make sure that we are following the trend and following the momentum of these candlesticks, okay? So this would end up being your liquidity grab, which is nothing more than a wick on a 4-hour when you look back at it, okay? So the liquidity grab up, lower time frame, and then a closure below, and then we're looking to enter on this, on the impulsive move, because basically that's what's happening in this instance, okay? In the other example, we've already gone through this briefly, okay? But we've got the lower low and then lower low, and we've got higher low, higher high, okay? So the liquidity grab, this is a little bit more common knowledge then. So this is a reversal pattern, or liquidity grab and a confirmation up. Like if you've gone through the 15-minute time frame strategy guide that I've got, you'll be looking for this kind of pattern on a 15-minute time frame. I think that the entry method on the 15-minute time frame could be improved, and certainly if you move up to the 30-minute time frame and use this entry method rather than just entering on the close or pullback, I think that the success rate of how many trades you're going to win compared to how many trades you're going to lose or break even is going to increase. It's purely based on following the actual structure of the candlesticks and reading what the candlesticks are actually telling you, because the higher up the time frame you go, the easier it is to read. Okay, so you got a low, lower low, higher high, entry on the break, and once you enter on this candle here, after this low has been made, obviously the liquidity grab has occurred. Okay, we're not looking for liquidity grabs mid-range, something around about here, that kind of thing. We're not looking for these patterns anywhere other than supply and demand, or support and resistance, or manipulation points, or order blocks, or whatever it is that you want to trade. This system works with everything. So that's basically my understanding of how liquidity works. You've got the liquidity grab here, okay, which is on the lower time frame going to look like prices rejecting and moving back up, and then obviously this is self-explanatory really. If you've got any experience in the market, you'll know what this kind of signal is to most traders who trade any type of system. The entry method that I've been using on this is much more, there's a much more higher success rate, and it's just patience basically, and building up a collection and a journal of how many trades that you're taking, and just follow this method. Look for the higher highs and the higher lows of the candles, and look again on the breakouts. Once we close below a level, if we've got a strong close below level, the chances are that level is not going to hold. So read the candlesticks and let them tell you where the market wants to go and just follow suit. Okay, so I hope you enjoyed this video. Any questions, ask me in the chat room or send me a DM. I'll see you in the next video.